If you're an NFT creator in the US, you probably haven't had time to even think about the dreaded word tax. So instead of tearing your hair out last minute, don't worry, in this video we've got you covered. We're going to break down some of the key areas in which NFT tax may be affected, from airdrops to gas fees and even capital gains tax. But it doesn't stop there, because we've also got some top tips to help you stay organized with your tax right into next year too. Oh, and when I say we, I don't mean it's just me telling you all the advice. I've actually gone and sought a real life professional who actually really knows about these things. Now, creators come in all different shapes and forms in the NFT space, and you might be an artist who's created a one-of-one piece of art, or you might be part of a team that's generated a 10,000-piece PFP project. You may view your journey into the NFT space as a hobby, or you may have even deep dived into a fully fledged business. Either way, there are tax implications that do need to be considered, and you need to know where you stand in terms of the IRS. So Kate, why don't you give us a little bit of clarity on this?
In the eyes of the IRS, which is the US tax authority, a hobby is taxed differently than a business. And so we need to first make the distinction. Are you operating your NFT creation as a hobby, or are you going to be down the road of a legitimate business? And so there are a couple of qualifications that you need to meet in order to be viewed as a business in the eyes of the IRS. One of those being regularity. And so, for example, if you are a creator and you've made a one-of-one NFT and you've sold that piece of artwork, and you're not really sure if that's something that you want to continue with regularity and form a formal business, then the IRS would view you as operating a hobby. And your hobby income is still taxed, but in the eyes of the IRS, you won't be a sole trader or going down the road of operating a business. And so if you meet the regularity qualification, meaning you're producing NFT art regularly and selling it, you're generating a profit, and you check a couple of the other boxes like you have a website, you're keeping business records, things like that, the IRS will view you as having a business and being a sole proprietor, even if you don't have a formal business entity yet. So that's a really important distinction to make in the early days of your NFT creations. And then if you're unsure, just speak with an accountant or a tax professional. They'll be able to tell you if you qualify as a sole proprietor or if you're falling under the hobby category.
So the amount of tax that you're actually going to have to pay as a creator will really depend which bucket you fall into. So you need to make that distinction as early as possible before you make any tax-related decisions. So now that we've got that sorted, we're going to take a look at exactly what is taxable when it comes to selling your NFTs.
In general, it's really important to know that your business income is going to be taxable if you're selling NFTs as a business. And so what's taxable though, if you receive cryptocurrency in exchange for your NFT, which is probably the most common scenario that we should focus on. And so say you create an NFT project and you're receiving Ethereum, for example, as compensation for those NFTs. What's taxable to you is the USD equivalent value of that Ethereum that you're receiving on the date that you receive it. And so if you released a project and then over the course of a month you sell out, but every day you've received different amounts of Ethereum in exchange for those NFTs, you'll need to know what the USD equivalent value of that Ethereum is on each of those dates that you received the Ethereum to then be able to calculate what your tax will be in US dollar terms.
Oh, sorry, I was just having a quick NFT break. I just wanted to let you know that we're bringing you this video in partnership with the brilliant Society of the Hourglass. Now, this is a brilliant, innovative new project that is bringing NFTs to life through books and an animated series. And it's got the goal of onboarding the next generation of NFT collectors and creators. They're kicking off their minting on the 4th of January with the public sale, but if you get in quick, you can also be part of the pre-sale on January the 3rd. The mint price is 0.07 ETH, and holders will get an illustrated seek and find book featuring characters from the collection, potentially even theirs. The holders will also receive amazing rewards from Hashku, the minting platform that they built, and they're onboarding lots of other projects too. So if you're wanting extra pre-sale access, free NFTs, that's the place to go. So huge thanks to Society of the Hourglass for partnering with us on this. And now I'm going to finish my NFT whilst you guys get back to business. Now, for anyone who's sold an NFT, you'll know that one of the most appealing parts of it being sold on are the royalties. And those royalties can occur for the duration of your lifetime. Now that really is incredible, but don't think it doesn't come without some tax implications.
So it's important not to forget that that royalty income is also going to be taxable, even in the context of a business. And so again, it'll be on the date you receive the royalty. If that royalty is in cryptocurrency, you'll want to note the USD equivalent value of the crypto on the date you receive it, because the IRS only cares about the USD equivalent value of any cryptocurrency that you're receiving as compensation. So you just want to note the USD equivalent value on the date you receive it, and then that royalty income will be taxable to your business.
Now don't worry, there definitely is a silver lining when it comes to being an NFT creator, particularly when it's to do with some exemptions and deductions for your business.
If you're operating as a creator and you have a business, you'll be eligible for all of the same tax deductions that you would if you had a business that's outside of the Web3 context, right? So don't forget about all of the normal business deductions that you're eligible for. Things like your home office, your internet, your utilities, your phone bill, expenses that you're incurring anyway that are ordinary and necessary to be operating your business. Don't forget about those deductions that you'll be eligible to take as well.
Now, if you're planning any airdrops or giveaways as part of your utilities for your NFT community, well, you might just be in luck. Because although the receivers of those airdrops may have some tax implications, you're actually in a much better place, but you do need to be organized. Isn't that right, Kate?
If you have an NFT project and then built into that, you're going to give your customers airdrops or other forms of utility, that's important to know that for you as a business, if you incurred a cost into creating those NFTs that you're then going to airdrop, that's also a business deductible expense to you as a business owner. And so it's important to track that. You don't want to just spend effort and funds, into creating an NFT that you're going to airdrop and give it away without recording your costs so that you can then help offset your taxable income to the business.
Now, in even better news, I'm going to talk about something that everyone hates. No, I'm not just talking about taxes, I'm actually talking about the Ethereum gas fees. Now, you might be wondering, why am I saying this is even better news? Well, you'll see.
So if you're an NFT creator and you have a business, the good news is that gas fees are tax deductible. So this is finally a point of relief for everyone. Yes, the gas fees will be treated as any other ordinary and necessary business expense, and there'll be a deduction for you under your business and reduce your business income effectively. So that's a very, very good point. Everyone should be very happy if you're an NFT creator.
You can write off your gas fees. Yes, that's amazing. And it doesn't just stop there, because if you're wanting to be more organized for the tax year ahead, then we've got some fantastic top tips right now to help you and your team get ahead for the next tax year.
Tax planning season really begins when the new tax year starts. And so if you haven't thought about tax planning yet, don't worry, you still have a couple of weeks. But I would emphasize anyone who is operating a business on a monthly basis to understand what your income is, understand what your expenses are, have a sense of what your tax position is as you move throughout the year. Because as a business owner, it's even important to be a step ahead and making decisions related to tax in particular. I'll just leave one last tip for NFT creators who have a business. It's easy to forget about capital gains tax when you're in the context of owning a business. Most people think of capital gains tax just from a personal investor standpoint. But if you own a business and you receive cryptocurrency as payment when you sell your NFT, and you hold that crypto for a month or two, and then later you decide to convert that crypto that you earned from selling NFTs into fiat to spend, right, in the real world, you'll still incur capital gain on that crypto that you earned as a business owner and held. And so capital gains tax implications still apply for business owners. Just don't forget about that. I think that's probably the best tax planning tip I could offer in the short window that we have before the end of the tax year for our creators. Don't forget about capital gains.
Well, that's been an incredible amount of knowledge to help all of you NFT creators out there, whether or not you're a small hobbyist or you're actually pulling out a fully fledged business. I hope you guys have found that really useful and you've taken lots of notes. If you need more help in your NFT journey, then please don't forget to check out these videos. Huge thanks to Kate as well for her knowledge. She'll be back with more videos for us to help you guys out. But for now, thank you for watching.